Good evening and welcome to Mortgage Coffee Talk. I'm your host, Tahir Qureshi. Today, we will be talking about basic principle of mortgage loan. With my guest panels, we have Subsbury. He's a mortgage broker and president of CMBA. And also Frank Restorik. He's a CFP, IPC Securities. So welcome you guys. I thank you very much for joining me today. I'm going to ask Frank if you like to introduce yourself for a minute about your background and experience, and then we'll continue our discussion.
Sure, happy to. Thanks for inviting me. My name is, as you said, my name is Frank Restorik. I'm an investment advisor with IPC Securities, certified financial planning designation as well. I've been in the business since 1992. Graduate of the University of Guelph in economics and politics. Started right out of university in the business with London Life, and kind of progressed through various roles with Manulife Financial as a salaried financial planner, at TD Bank in their estate, as the estate planning role in their private banking area. Got my Canadian Securities course, and now a fully licensed investment advisor as well. And also, my opinions will be my own, and they're not not the opinion of IPC Securities as well.
Okay, Vasa, would you please introduce yourself to my audience? And before we begin our program.
Hi, Wes Subsbury. I'm a mortgage broker, residential mortgage broker with Homeguard Funding Limited in Newmarket. Also president of the Canadian Mortgage Brokers Association, Ontario. I've been working in lending and mortgages pretty much my entire life. Had a 10-year career with Laurentian Bank and B2B Bank, B2B Trust at the time. Worked my way up through customer service to management, and joined the mortgage brokering world in 2012. Our practice is family owned. We've been in business since 1983, and our focus is on residential and helping clients and our referral partners achieve their dreams.
Fantastic. Just to let you know, I mentioned that to you before. I'm a principal broker of a Canadian Express Mortgage Inc. and also member of Canadian Mortgage Broker Association. So thank you, President, for joining us.
Thanks for your membership.
Thank you. You're most welcome. So today's topic is about, as you know, pandemic has affected everybody's life. There are, according to Korea, there are 40,000 transactions pending, going through the process now for closing, and potentially lots of people have lost their job, their position. They have it when they purchase the property. They enter into agreement of purchase and sale is not going to be the same, regardless of funding coming from the federal government for support program, and how soon and when they are really effective. So everybody is applying for deferred payment. I have talked about those things in the program in the past. So today we are going to talk about is what are the basic principles of mortgage loans. Comes to my mind is one is income, one is a credit, one is the equity down payment, and third one is a property. So we're going to talk about how the income, what are the sources of income in Canada, what are the verification documents that we require to verify the mortgage. And since we're going to talk about the mortgage insurance, and Frank is with us, so I'm going to start with you, Wes. When you talk about having a stable income, verifiable or sufficient earning, what this means? Can you tell us a little bit based on residential experience?
Certainly. Well, I mean, there's many forms of income that the lender will accept, and I mean, these are unprecedented times, obviously, with respect to COVID and people being off. But what most lenders are looking at, everything is case by case. So they'll look at what is your historical track record? Like, how long have you been at your job? Are you self-employed? How long have you been self-employed? What are your annual sales? What are your revenues? And what is your contingency? For those of us who have been affected and are potentially off of work right now, if you're in a transaction to getting ready to close and you've lost your job and the lender calls your letter of employment and they find out that you've been laid off, there are some variables at what they look at. And number one, the insurers have guaranteed that if you were in a firm binding purchase agreement before March 25th, they will still back your mortgage. Therefore, the lender will still fund it.
Well, that's a good news. That's a very good news, eh?
Yeah. So if you're in a firm and binding purchase agreement, there will be no new underwriting for insured mortgages. Okay, an insured mortgage is when you have less than 20% down.
Yeah, you have to go to CMHC, I guess.
Yeah, CMHC or insurable mortgages are similar. If you have more than 20% down, but meet the criteria for an insured mortgage, these loans can still be backed in the background by mortgage insurers. So that's good news. I mean, you did not know that this was going to happen to you. You entered into a firm and binding agreement. So, I mean, that's the good news. You will still have your mortgage financing. However, I mean, everybody should have some kind of contingency plan. So because we don't know how long this is going to go on.
Yes.
So how long are you going to have a reduced income? And you have to relook at your budget. So if that means putting less money down, for example, and keeping money aside, that is a good indicator that you'll be able to cover mortgage payments for a short period of time.
So basically, what they're trying to do is to look at the sources of your income and consistency for a period of time. You have a history, normally 2 to 3 years. You get your T4As and T4s and tax return. If you're self-employed, they want G1. T1 or called T1, and look at your business aspect of it. So they look at to see what is your legal way of earning money. The money that you have declared to CRA and then is verifiable that you have paid taxes on it and you have a notice of assessment for 2 to 3 years, correct? Something like that?
Yep. And, it needs to be current as well. So they'll look at the documents you have, but it has to be current income. It can't be if you're so we've had situations come up, for example, a self-employed borrower, say they're a massage therapist. They're currently not working at all.
Yes.
Now, so they don't have any current income. So if they went out and bought a property today, they would not be approved.
Yeah. Okay, now I'm going to ask Frank. Frank, when we are doing this qualification process, what time people start talking to you about the mortgage insurance? If there's insured mortgage, which CMAC that we normally get it, is there something that is linked at that stage when we are trying to verify? We should be talking to you as well if there is a mortgage insurance involved?
Generally, mortgage insurance is done once you're approved for the mortgage. Once you could do it at the beginning when you've been pre-approved and you know what you're going to be spending. We can start the process then for sure. But generally, what happens is you get the call. We've bought a house, or we've got a new mortgage, and we need a policy for X, $500,000, $1 million, whatever the number is, and then we start the process. The mortgage insurance, there's only generally in business cases, that is only generally the case where they may require life insurance for the loan. Most residential mortgages, they don't require mortgage life insurance on the mortgage.
Yes. Okay. So that's what we're trying to do is to people who are in this predicament, because right now we are in the pandemic. So we run through the shock process when this Ontario government issued lockdown and Canada-wide, and people started laying off people, and people who already negotiated a deal. Based on my information from Toronto Real Estate Board, I'm also broker of record for City Priority Inc. brokerage, and the price has not declined. And according to what I have seen, report in March report from up to 15 March, we were 15.9% increased value from the March 2019 to 2020. Then from March 15 to 30 March, our percentage went to 10 point something. So that means we came down 5% down from 15 March to 30 March. And we don't know the status of the April yet. So still we were 10% positive from the last 2019 March to now. So regardless of this, I personally believe that once we reach the April data and April and May, it will really reflect the impact of the pandemic, because there is no action going on. I am a real estate broker. My whole employees, we have a couple of listings, but we are not showing it because we have restriction for the safety, the precautions that we have placed. People don't want to sign it. Even buyer broker saying we're not going to sign it because we don't want any liability if somebody gets sick and accuse our brokerage or the seller the house was contaminated for some reason. So we're taking precautions. So I'm expecting that there will be issues we will be dealing with it. So basically we are telling audience is that you must maintain good income stream of money, have contingency funds, and also be able to verify your information, verifiable information to when you're asking for a mortgage, whether you go to mortgage broker or you go to the bank, because there is no if and but about it, regardless of stress test that we're going to talk a little bit later. So now the second step, so let's assume now everybody, make sure if you want the brokerage to recognize your income, make sure you declare income and file it. If you're self-employed, we would like to have a T1 form and also T4As and T4As or T4s, but general ledger for 2 to 3 years. Number two, and make sure you declare all the income and you are earning sufficient funds to qualify for the loan that you are asking. Okay. So now next thing comes to us is credit. Credit is very important. As you know, we want to make sure our clients pay their bills. So and pay bills on time. That's another impact because of coronavirus. People will have some changes in happening. So what is your normal cases where you have a little challenge getting people to get approved, or where the benchmarks are that the credit union and Equifax use in your experience, Wes? Would you want to share about credit?
Well, certainly. I mean, a good credit profile it will help you qualify for cheaper mortgage rates. And good credit habits are looked at. So when a mortgage lender looks at your credit bureau, they're looking at things like how long have you had a credit file for? Yeah. What trades are on there? Do you have a bunch of, finance trades, or do you have bank trades? Do you have any loans? And the credit bureau shows you the historical trade record on a monthly basis. So have there been any missed payments in the last 6 years? If there are missed payments, you need to be prepared to explain why that happened. And I talk to many people and they're like, well, I was on vacation and I forgot. Well, that's okay. That's an isolated incident. But, what happened in May and June and July, so you have to be prepared to explain most lenders will understand life happens. If you have a blip on your credit, make sure it's explained. Things that are big no-nos, if you have outstanding, if you have current late payments, I mean, that's a big no-no. If you have any accounts in the past that you've defaulted on. So when you default on an account, that is when the lender has they've sent it to a collection agency. You didn't pay your bill for, 3-6 months. We're done collecting from you. We'll send it to a collection agency, and that account, that bad debt will stay on your account until it's paid, and it will remain as a balance. So there are ways you can improve your credit if something bad has happened. But good general practices are keep your account balances at less than 50% of the credit limit. So if you have a credit card for $5,000, try to keep that. I mean, if you can, obviously pay it off in full, but if you can't, then keep that balance under $2,500.
Oh, so that's a good approach. So I'm going to ask you, Frank, do you have any mortgage insurance where you have someone has a bad credit and you are able to help them out, or what happened? If you have, can you experience anything like that without naming anybody? Just experience.
Well, the life insurance, mortgage insurance, or mortgage or creditor insurance has nothing to do with your credit profile. It's all about your health. Are you taking medication? Have you had cancer? Do you have diabetes? Different health challenges. So it has nothing to do with you getting the mortgage or your credit product.
Yeah. Okay.
And Frank, but it would help you avoid getting bad credit if you have
if you have
illness.
If you're self-employed and you have disability insurance, or if you have a critical illness policy and you've suffered a critical illness, for sure, it would definitely keep you able to stay current with your obligations for sure, and protect your credit rating and your credit score. Absolutely.
So I'm going to ask you, what is the criteria that you use when you are approving? Is it based on health? Is that what you're saying, or age?
Yes. Yeah. Just definitely health.
Yeah.
So how old you are, whether you're a smoker or not, affects the rates. And then what type of health history you've had personally, what type of medication you're taking. And then there are also certain hereditary diseases that insurance companies have a look at, which is all factors into the premium that you're going to pay. So the sooner you have something in place, the better, because the rates go up every year.
Oh, okay. So basically, now, same point before I go to back to Wes. When we're talking about the mortgage insurance, when we apply and we get the approval from the lender, and there is a form where first we know that people don't want to take that insurance and they strike it off. They need to give that affidavit that they don't want that mortgage insurance. Remember that, Wes?
Yep.
And I'm going to come back to you. In those cases, what is the difference that you as a CPS, you are offering for mortgage people, for mortgage who's carrying a $500,000 mortgage, as compared to what bank is offering or the lender is offering through the mortgage process? What is the difference between the two?
Generally, there's basically two. Creditor insurance is generally more expensive than getting your own individual policy, because when you're getting your own individual policy, you're providing your medical information up front. You may be doing a urine or a blood sample as well. With just creditor insurance, you just sign saying yes that you want it, and that's partially why the rates are so high. The other key thing to keep in mind is if you have a $500,000 mortgage to start, and you pass away 5 years later and it's down to $400,000, it's just the $400,000 that is paid back to the bank. If you have
whatever is balance,
right, the balance is paid off. If you have an individual life insurance plan from Manulife or Sun Life or RBC or whatever the company is in Canada, that $500,000 is paid to your beneficiary, and they can choose. They may want to pay off the balance completely, or if they're working and can handle a certain payment level, they may not pay it all off. It's all for the beneficiary to decide what's best for the family. They're in the driver's seat, not the bank.
Okay, Wes, in your case, when you are processing the mortgage, you got a commitment from the lender. You have that form, correct? You give it to them because lender wants you to get that certified because there is a charge for that. Can you tell us how many in percentage the people who opt in or opt out from this, and what is normal charge? Is about 1% of the loan amount?
Well, I mean, I think first and foremost, and I think Frank would agree with this, the main thing that you need you need to have some kind of protection. So when we're working, we're required as a mortgage brokerage to offer our clients creditor life insurance, and our policy is underwritten by Manulife. Typically 1 in 5 will take it. And they're the new home buyer who maybe hasn't even looked at the insurance. And we always tell people, this is a great start for you. You have coverage, but there may be better options out there for you, and you should speak with somebody who sells life insurance and get a policy that's attached to yourself rather than have it to your mortgage. But everybody does need coverage. We offer life insurance. We offer disability insurance. And the big piece in the disability for us is that it's not tied to your income or your employment. So if you were working out and maybe you're a construction worker and you pulled some muscles and you can't go to work, or if all of a sudden you're off work because of COVID or quarantine and you cannot work, the coverage will make your mortgage payment for you in those events.
That's fantastic. Now, so basically, we rewrap that because pandemic like unexpected happened, unprecedented, locked down the whole country. So if we have thought about the insurance, I never have insurance. I'm 67 years old, never had insurance. And now you can see that our income is done. We have to carry on and all the challenges we have. And luckily I kept some contingency funds, so I'm okay. I don't qualify for any of those programs they have, and a self-employed who's still working, trying to do things, and here you go. So I think this pandemic has totally changed our lifestyle. Social distancing, learning new way of communicating. I never thought I'd meet my president on a Zoom, on Awaz TV, and talk to Frank about the insurance. Never thought that we're going to be face to face. So we are so connecting. So we are getting more innovative, looking at technology to how to implement this and use it for our advantage. So I am very sure now, moving forward, our audience are listening to our experts. That is a good idea to think about now, the mortgage insurance, or get advice from Frank to help you choose the type of the insurance that's necessary to protect, because this coronavirus is not going nowhere. It's going to come back again. And the problem is the enemy is in the air, that we don't see it, right? We're walking, talking to people. We used to hug and shake hands. We can't communicate that anymore. So we have to learn to build our rapport, friendship, bonding through remotely or even from a distance. So we have to learn that. And I think this is teaching us, all of us, to do different things. And so when you are dealing with, mostly I know the mortgage, we have an online application, probably you're using a FireLogic also. I just developed my site to allow me FireLogic to apply for it. So I'm sure you're using electronics mean. In our FinTrack, regulation requires that we identify face-to-face people. So now their IDs are being verified through social media or through remotely, through Zoom and other means, because that was one of the very important documents that we met our client. Know your client, right? Mm-hmm. It's a challenge now. Know your client. Then we look at the product and we look at the suitability. So this is a challenge, and I'm sure how you are doing it with this. Before we go to the next topic, how you are meeting your client, I'm going to ask Frank as well. How you are conducting your business when you used to go and invite them to your office, or you go to meet with them. How you are doing this under the lockdown?
Well, we are using Zoom technology to have our face-to-face meetings. We collect identification electronically through our portal, and we have them show it to us in a Zoom call as well. So, it's easy to doctor a document. The fraudsters out there, so we have to be very mindful and careful and make sure that we have proper ID on file.
Yeah, absolutely. So now, Frank, before we begin to next topic, how you are doing your business?
Yeah, the life insurance industry has this pandemic has really pushed it onto online as well. Yeah. We have online applications before the industry was moving that way, but all the life insurance industry is completely open. We're doing applications online. Business is going on as normal. There's some policies for larger amounts, more than $1 million, and depending on your age, will have to be deferred until the nurse can come out to verify the vitals and the blood and urine. But if you're under 40, you can get $2 million of coverage online directly. And also with the pandemic too, for the audience that have existing life insurance policies, life insurance companies are also offering premium deferrals as well. Those are also available for policies.
Wonderful. Thank you very much. Now, audience, you know that we have to have a verifiable income, and we have to have a credibility. That means you have been paying your bills because you want to ask for loan for your house, normally a house or buying a residential. We're talking about residential, but commercial has a different aspect. But today we're talking about residential. So make sure you're paying your payment. And I think I advise my audience, when you are arranging a deferral payment, make sure you have the approval before you slip a payment. If you did not get a confirmation from the bank, make sure that you pay your mortgage. Otherwise, you will go to default and it will become a record that you didn't pay, even though you may have applied for it. But make sure you have the money in the bank. Once you get the notification from the bank that it's been deferred, then it's fine. So be careful about that. This is what we are talking about, the credibility, to make sure you are paying your bill and you are a credible person and you have a good rating. What is a good rating? Is about 700 point?
Yeah, 700. Anything really 680 and above is fair. Once you get up into the 800s, that's very, very good. Below the 600 mark would be considered poor.
Yeah. Okay. So now we're going to move to our third element. So first one is income. Second one is credit. Third one is equity, which is a down payment. How much you saved when you're buying a mortgage, asking for a mortgage. People want to buy a home. The money they don't have. They want to buy a home. They want the bank to give you the money, but they have no money. But the bank wants to know how much money that you're going to put down. So conventional mortgage is 20%. You don't want to go to CMAC because high risk loan to value ratio. If you're paying less than 20%, you have to go to CMAC, and there is a premium for that. We're going to talk. So now in down payment, can you tell us the sources of down payment? And there is a gift and all that stuff. So I'm going to let you speak about it. What do you need verifiable down payment paperwork verifiable? What do you look at the down payment as the equity?
Yeah, so typically lenders are looking, they have obligations, anti-money laundering and terrorist financing they have to confirm that that the down payment is from your own resources.
Yes.
By your own resources, that means it's been saved. It's been here in Canada. It's been saved for at least 3 months
Yes.
in your bank account, 90 days. So they're going to want to see a 90-day track record of any money. So if on day 45 in that statement they see a $10,000 deposit, they need to understand where that came from. So if that came from another account or an investment, then they need a 90-day history of that account as well.
Yeah. Yes.
Okay, so they follow the money trail. Other ways that people are getting down payments, you can receive a gift from a family member, and it can't be from a long lost cousin. It has to be a direct family member. So immediate family, to grandparents as well. And actually, that's a trend we're starting to see today. To hear people are actually helping their children out by taking reverse mortgages on their homes and giving early inheritances to their children to help them get into the real estate market.
And this is what I'm going to add to it. When you are gifting a money, make sure it's not refundable. Otherwise, if it's a loan, then it will be used toward your credibility, because your loan will be reduced, I guess. The threshold.
Well, that's another good point to hear, because you are allowed to borrow your down payment as long as you can confirm you have the income to service that new loan with your new mortgage.
Because the bank will see as a liability, a debt, if there's a loan, correct? So they will add it up to the qualification and minus it, because you still owe that money. So your threshold, the mortgage amount, will go down a little bit because of that. If it's non-refundable, that means it's a gift given and there is a proper document signed, witnessed by the lawyer or some authenticated, not just a piece of paper. Anybody can sign it, right?
Mm-hmm. The lenders are taking it a step further and verifying that gift has indeed made it to your bank account. So they're going to want to see the gift letter coupled with a statement showing that deposit into your bank account.
Yeah, absolutely. So that is where the down payment is. Do you have a saving account? Do you have an RRSP that you can draw money to put down toward the house? I think 90 days hold on period when they transfer the money from CRA into the buying the home. So your RRSP, there is a Canada saving account or something like that, or any source of income. You might have some stocks. You bought some stocks. So basically your asset are equity where you can bring the cash, and you are showing that in that cash you have, filing tax return based on your income, what saving that you did. As long as you can have a bank statement to verify that and that this is true based on the income, and there is saving there in a specific period of time, you can verify this is reasonable saving, even though this day and age you spend too much money, more than what you earn, right?
Well, I've had clients sell vehicles for their down payment before. Yeah. So they need the bill of sale to show that vehicle was sold, and they need to see the money in your bank.
Yeah, this is very, very important, our viewers, that when you are looking into purchasing a home or real estate for investment or as a principal residence, make sure you have verifiable income. You also have credibility that you have developed a history that you have been a responsible person. Let's pretend that you want to give money to somebody else. And what you want to do before you give somebody, to make sure you pay back, he pay back to you. So this is the same thing as bank is doing it. They want you to take our money, but please make sure, satisfy us that you're going to pay back to us because of your income, you have your credibility, and now you have saving cash payment that you're going to be making for purchase. That's your credibility, and we see that you have a continuous income, and then you're going to pay back. So this is where verification income. Now, in your case, in insurance, Frank, you don't have anything to do with this verification of income, but you want to make sure somebody get the insurance that they pay you a premium, correct?
Right. There is a questions on the application about bankruptcy and things like that. Term insurance is a little bit more lenient from that standpoint, but when you get into permanent plans like whole life or universal life, there are more questions about. They are looking at money laundering guidelines as well. That's definitely, especially when you get into larger deposits, anything over $100,000 has to have a lot of documentation to it. Yeah, for sure.
Okay, that's wonderful. So now our other point coming is which is basic rules, principal rules regarding financing is the property. What property is being used as a sufficient collateral for the loan they're asking. So once somebody comes to you, there are three stages of mortgage. First is to people to get qualified, they need to talk to a mortgage broker or a lender, provide them ID cards, all the documents, and then you are going through from a discovery call to learning, collecting the facts about getting a mortgage. Then you are at a pre-approval stage before you make a commitment to start buying a home. So you need to know how far you can go with the money and resources you have. So the best thing to come to you is to come to the mortgage broker, because we are licensed to practice in the province of Ontario, and everybody has a license number. So when the people come to you, you look at the liability and asset, and you look at their ownership of the property in your application. So can you tell us what you look into the asset? If they own a property, they own one property, two property, rented property. How do you see that? Or is a first-time buyer?
So in terms of how do we find out what properties are owned, or?
No, let's assume that somebody's looking for a property to purchase, okay? Mm-hmm. And value of the property versus the down payment is being made and as a collateral. Is it the property they're buying is enough and satisfactory being a collateral for the loan?
Yeah, so the lenders look at, the property needs to meet the lender's guidelines. Yeah. So if you're applying for a residential mortgage and you're buying a industrial warehouse, well, that's not going to work. That's a different mortgage type. If you're buying a farm, somebody buying a farm, if the zoning's agricultural, that causes problems. The other big thing, if you're buying a property that's rural and has a lot of acreage, lenders typically scale back and will only appraise that property based on 5 or 10 acres. So, you may be buying a property for $1 million, but it's 80 acres and it's got a small house on it. Well, a lot of the value is in that acreage. So they look at but your basic home, they're looking at what is the condition of the property. If you're buying a property that needs a lot of work, they may not want to. They may have a condition that the work needs to be done before they will fund it. So they're looking at the condition of the property, and most lenders they like readily saleable homes, so subdivision type homes. So if you're buying a unique home on a ranch, you're dealing with different lenders usually than or you're limiting the number of lenders that you can go to in those type of situations.
So basically, when it comes to the property, and we get the pre-approval, is normally subject to appraisal. Because since 2017 and now, property fluctuation has happened many times. So I believe that when you are doing a 20% down payment, the appraisal is the must, because the bank has no security from CMAC. So right. They are their own, correct? Mm-hmm. If his loan to value ratio is high risk and below 20%, then they have a security from CMAC. They're not worried about it. I haven't seen a single appraisal when it goes to CMAC and they do appraisal, because
but bank is guaranteed the insurer will sometimes. The insurer will.
Insurer might well do it, but not the bank, because bank says I'm guaranteed because by the government. Okay, so
So
those are great.
I always tell people to hear, this is great on paper, you're pre-approved, everything looks good, but the property matters. And so you always need that condition of finance, because unless you have the $800,000 to buy that property in your bank account, you're relying on a lender to approve that, right?
Absolutely. I have so many times that people were going into bidding war. I never allow my client to go beyond their means, but I kept them a little bit below their budget and let it go. Because when you go emotional and you set aside the logic, you get in trouble. And time as such as we are facing now, even though the prices not go down, but impact is that what will happen if the price fluctuate, it goes down, and you're living in a house and you're going to be cursing yourself buying a property, emotionally paying 10-20% more than the asking price. Sometimes the agent lists low prices, which I really object to that, because they should calculate the value of the property. If they can't find comparable, they can use a cost approach. There are appraised value approach. I use different 15% ways to calculate the value of the property. Therefore, when I list the property, I want to make sure it's fair and reasonable, and my client will be, when I'm selling it, basically, they know what the market value is. Sometime in this day and age, if you overlist property, nobody will come to you. If you underlist to create a competition, but you're not getting more than what the worth value is, unless somebody get excited and emotional, and they go with the flow. And we have so many examples in the marketplace where people have been hurt. Okay, so idea is that appraisal is very, very important document. Also is another mean of buyer to verify independently that your real estate broker or agent who bought you the property, the bank has verified this is a valid price that you bought. So regardless whether bank buy it or bank or the CMAC do it or not, I think they should pay. It costs about $350 to $400 to have an independent opinion about it. Have you ever done anything like that? Or I'm sure that in mortgage, buyer pays for it, correct?
Yeah, the borrower will pay for the appraisal. Sometimes companies will have appraisal rebate programs after closing and things like that. But to secure the financing, the borrower will pay for the appraisal. They're typically $350 to $450, depending on the property.
It's worth it. With the worth of value and peace of mind that you're going into the house, and it is fairly priced, and you negotiate a good deal, it's win-win, and there's a peace of mind that you can fall back at, especially if it's a matrimonial home or it's a common law. If something happens that a relationship break down, it had happened. I have seen it one time with one of my clients happen, and appraisal was there, and they, after moving the house, two months later, they were telling me to sell the house. Okay, and those cases, the appraisal was there, and if one party wanted to leave, they have the choice to split the price and buy out the other guy. But both decided to sell it. Luckily, timing was good. We made a good money for them, and even 2 months they made good money. So this is why it's very, very important to have appraisal. So basically, you have an income, you have a credit, you have equity, and appraised value of property. So make sure there is enough equity in there. When the people especially put less than 20%, let's say they put 10%, and under these circumstances, what's happening now, if they're financing it, if their equity is 10%, and they might have an equity home line of credit to draw some money during this period, so they will have a struggle if they don't have any contingency funds in this pandemic era. What do you think, Wes?
If they only have 10% equity and they don't have any fallback position and they've lost their job, of course they're going to struggle. And that's why I was very happy to see the financial institutions respond with deferral programs. Nobody wants to see people lose their house over unprecedented circumstance. And I mean, hopefully, and there are other things to consider. I mean, if you're in a budget crunch today and you maybe you only have a 10-year amortization left on your mortgage, you can talk to your lender about increasing that amortization and lowering your payments in the time being. So, and you know, the bottom line is you have an obligation to make those payments, and if you can't make those payments, you must communicate with your lender. They will do their best and go out of their way to make sure that they're going to accommodate everybody who needs help today.
So definitely, I think the government took very good initiative. As you know, they bought $150 billion worth of mortgages from the banks to free them up for the loans. Do you know that, right?
Yep, liquidity has gone up, and you're seeing that you're starting to see some interest rate discounting happening again. And, you know, we had a short period of time there where rates had gone up, but now they're on their way back down. So
because the flow of money was blocked because they have given all their money to now Canada Mortgage Housing Corporation owns trillions of dollars worth of our homes now because the loan has been sold out. So everybody knows that when we take a loan from the bank, they give it to us, but they will ask people who have the money to loan them. So when you leave the deposit in the account, you invest in the bank, they take that money and they reinvest it, they make money and they give it to us. If they need a short of reserve funds, they borrow from the Bank of Canada and they give it to us. This is how the system works. Idea is the government of Canada is buying billions of dollars mortgage loans back again they're saying is every week they're doing it now. So make sure there's a plenty of cash available to the bank to give to the business. Now, this current pandemic happened because of health, not because of economic instability. The instability happened because coronavirus, it was a decision of the Prime Minister and the Premier of Ontario to lock down, shut down the operation for the safety of public. So and people were laid off, so they provided $40,000 to the businesses, to $2,000 for next 4 months to the people who have lost their job, and they are giving 75% of the pays to some employees. And I know few of them already told me that they are on that 75% of the pay. I think in my last episode I mentioned about 847 or something per week is the maximum they can get under this 75%. So this is a good thing, you know, that everybody's cooperating, everybody's working in this case. So now I'm going to ask both of you is just when you're still doing all remote distancing, your processing application, everything is normal. Is your business has gone down because lack of transaction on real estate? Wes, before I go to Frank, how's your condition, sales before pandemic, and how much percentage? I'm talking about Ontario because you're a president of Canadian Mortgage Broker Association.
Well, I mean, our practice is very mature, so we have a large client base, and with the low rates, there was an opportunity for a number of people to restructure, refinance, or maybe renew early. So we've been very busy just servicing our clients. I've found the purchase transactions have gone down substantially. Really the only purchase deals that I'm working on were deals that were signed in March, like early March, and they're closing in May, June. So I do expect, you know, it is a good time. People are home. Okay, so it's a good time for everybody to review their finances, and I would implore anybody to speak to their lender or their mortgage broker, and their financial planner. Like Frank, being a certified financial planner, the market is down, and anybody under 50 years old, we've got time. So it's if you've got cash set away in liquid investments, it might be a good time to sit down with your financial planner and or talk to your mortgage broker and refinance those high interest debts, free up some cash flow for yourself, re-amortize. So we're finding business has been good, and really we're just trying to reach out to our clients to make sure everybody's okay. Right?
Yeah, wonderful. Now that's great. I think this is you sum it up. Again, we in last seminar I mentioned about the personal guarantees. If you have to buy something, you can buy it together with someone, or use a friend to sign with you. Do proper partnership agreement to make sure at least you have a home, because lots of people don't maybe not qualify. So just to begin a journey that you have a potential of buying together, sign a proper agreement, and buy it, and a couple of years down the line, you can split it. You both have something to build your equity on, rather than not doing it if you are not able to afford it. So there was so many things we talk about: history, economy concern, business loan, cash advances. We talk about weakness of the industry, and sometime in businesses you don't have a proper management in the business. The bank don't give you loans because you don't have a proper management. Same thing is, as a responsible consumer, you have to make sure that you are managing your budget, because you know what your income is. You spend so much money and you save for the rainy day, and this is the rainy day that we never expected, but we are all working toward that. So with that, I'm going to ask Frank, can you tell us a few things about yourself, and again about your type of mortgage that you're offering? And this will be your last minute of wrapping up your side, and then I'm going to go to Wes, and then we're going to end the program.
Thanks. Yeah, I definitely agree with Wes. Now is a good time to be looking at your financial situation. Interest rates have come down, as we all know. The other area where interest rates have come down is on the savings side. So Tangerine, Simply Financial, those rates have come down significantly too. They're at about 0.4 or 40 basis points. So there are some other options that your financial advisor or your financial planner can show you that's a little better rates. If you do have permanent life insurance, there are some with cash values that you can access as well at some favorable rates. But going back to the beginning about the mortgage life insurance, generally when somebody calls me for that, it's more, we look at the big picture first. So there may be a younger guy like Wesley, he might have 2 or 3 kids, some car loans. We're looking at the whole picture. So if they just have a $500,000 mortgage, we're just not looking at a $500,000 policy, because there's income replacements and other debts that may need to be paid. So he may need a bigger policy. So it's an overall needs analysis and financial plan that's done for the client. And these are also correct. The coverages is not just strictly for death. Depending on what people have at work, and lots of people are self-employed now, there are creditor policies that pay out $2,000, $3,000, $4,000 a month if they're disabled, or if they have a critical illness is based on a lump sum. So it's really an overall financial plan review is done for the clients, and based on the numbers you get to what's the solution for the client. And with the market being down the way that it is, it's definitely a good time to, if you do have the time horizon and funds to invest. We've been doing that for clients the last month or so, been nibbling away at long-term quality investments. And this is a great time for picking up those assets as well.
Thank you very much, Frank. Would you like to give your phone number and your email, please, to my audience in case they need to reach out to you?
Absolutely. 416-884-2104. Frank.Restorik, Restorick, at ipcsecurities.com.
Thank you very much, Frank. So, Wes, thank you very much for joining. And could you please give a 1 minute brief before we give the final message to everyone? And also at the end, give your name and phone number and your email, please, to my audience.
So now is a great time, as Frank mentioned, to just review your finances. There could be opportunities out there to save money and interest, to lower your payments, increase your cash flow, and the recession is looming. So there could be opportunities for you down the road to people that are in good cash positions will flourish. So if you're tight to your monthly budget, sit down, review. It's a full financial review, keeping in mind, where your income levels are expected to go over the next few years, and what they have been historically. Always happy to review or just chat and give an unbiased opinion. Doesn't mean we have to sell a mortgage, meet a new client, service them down the road. And if it's not this deal, it might be the next one. I'm Wes Subsbury, Homeguard Funding. I can be reached at 416-995-3391 or by email wes@homeguardfunding.com.
Thank you very much, both of you, Wes and Frank. It's a great pleasure to have you. On closing remarks, on behalf of Awaz Entertainment and Realty and Mortgage Coffee Talk, we and all my guests, we thank all our medical staff, police, health staff, and providing service to our nation, protecting us against coronavirus, putting your life online to protect us. We thank you, we salute you, we love you. We are there to help our charities, organization, food bank in your jurisdiction will need help. So I request and appeal to my audience to make sure that you donate funds to needy people. There are lots of food banks are suffering and they need some help. Mississauga Real Estate Board is also doing fundraising for Mississauga Food Bank. So if anyone wants to donate, please do that. In brief, when someone is requesting a mortgage, there are some rules that apply to the mortgage. We have to abide by those rules. Income requirement is a criteria that defines your ability to carry a debt burden or the loan that you want to borrow. So we need to make sure that you are maintaining good creditworthiness when you borrow money for the loan for the house. You have equity or down payment for your house to make sure that you are buying a purchase with a fully informed and prepared and have mindset to take this responsibility when you apply. Also, the property that you buy, to make sure that your property can afford it, you have assessed value through an appraisal. Your mortgage broker or realtor will help you to find a person to make sure that what you are buying is consistent and you feel comfortable the value that you have paid. The money you have paid, you have a value worth it, and bank will qualify based on fact. So you must be ready for the mortgage. Think about it and start early. Talk to your lawyer, talk to your realtor, talk to your mortgage broker, talk to inspector that you're going to use in the future. Make a team and put together a team and work together and listen to them, because each one of them are competent. They are licenses. They are in their specific jurisdiction. They're there to help you. I thank you very much for watching. Every Wednesday on Awaz Television, we have Realty Coffee Talk, 7 p.m. So see you then. Thank you very much for joining Frank and Wes. Good night from me. May God bless you all. May God keep you all safe. God bless Canada. Thank you very much.
Thank you.